non-existent changes as far as the Nifty is concerned. Not that the mid-caps in the Nifty, Bank Nifty are giving us too much movement.
We've got 40 points, so a slight pickup coming through at this point, 10,681. Okay, almost at the day's highest point, 10,710, 11 is where we are.
Okay, that was some time back, of course. From that point, the market slipped just a bit. On the way up, Vedanta was up 3.5%. That's a global move playing out. BP was up a bit, Larsen was up a bit, and JSW Steel also gaining about 1% in trade.
The market fails to hold opening gains to end lower for the 8th day running. Nifty slips 36 points, dragged by technology stocks. The Nifty Midcap Index and the small cap indices outperformed to end the day high.
PSU banks, realty and metals outperform benchmark indices to end in green. On the other hand, Nifty IT index loses 2%. Tech stocks contribute over 90% to the Nifty fall.
Emami promoters sell 10% stake in the company for 1,600 crore rupees. The stock surges 13% on management comments that proceeds will be used to bring down debt levels.
Kaveri Seed tanks for the second consecutive day on corporate governance issues. The management says they didn't inform the exchanges about suspension of HT Seed's license in Andhra Pradesh as they did not find it material.
And lastly, the latest government data shows several state governments are still struggling to reduce the losses faced by their power distribution companies under the Uday program. The NTPC was one of the top losers on the Nifty. The stock ended over 2% in the red. Those were the top 5 stories from Dalal Street. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we look back at the day which has gone by, tell you what mattered, and of course prepare you for the coming day as well. I'm Prashant Nair. With me, my colleague Surabhi. Hi, Surabhi.
Good evening, Prashant. Well, what a day, right? 8 days of selling and there's absolutely no let-up coming through. Well, over the next 30 minutes, we are going to be discussing a lot of these trends and we'll also be answering your stock questions and queries. Joining in today to do that are IIFL Sanjeev Bhasin as well as Mitesh Thakur. Thank you, gentlemen, for taking out the time and being with us on the show today. But first up, let's just rewind back and take a look at what happened. Down and out. I mean, the last 1 hour just proved to be quite brutal for the bulls, Prashant.
And the strange thing, Surabhi, is that even when the market was at the day's high, I mean, I think nobody was expecting it to continue. I mean, even when the Nifty was up 60 points, the commentary was, well, it is a weak market. I mean, there is lack of confidence. There is, I mean, and I think that kind of sort of came true by close. The Nifty lost over 100 odd points from the day's high. And we were down 36 points on the day, I mean, from yesterday's close. So, you know, it's a confluence of all the factors we've been talking about, but basically there isn't very much, I mean, there isn't a trigger, there is a lack of confidence, and all of this has resulted in, you know, just no buyers basically across the board. Volumes have been shrinking now for last many days, and it was very evident if you look at the top stocks, both on the upside and the downside. Volumes have really shrunk. It was true yesterday as well, and it's true today as well. Mid-caps and small caps did a little better. Advances were more than declines. But, I mean, that gap also, which was 2:1, came down. The gap closed pretty sharply, 900 to 700, if you look at the active part of the market. Advances to declines. Globally, I mean, again, a very dull kind of a day, not very much by way of price action or cues. I guess globally, the next thing people are going to watch is what comes out of that latest US-China round of talks, which starts in Washington later in the day. Maybe that'll throw up some fresh triggers one way or the other. But otherwise, very little interest per se. But Surabhi, lots in terms of stocks or dull day there as well?
Well, large caps, definitely lots of action. The big boys really coming in to put pressure on the downside today. That was what the action was about. So very quickly, pull up some of the big IT names. So whether it was a TCS, Infosys, you know, Wipro, HCL Tech, you name it, the entire IT pack was under pressure. Look at the kind of stress TCS is putting on the index. That itself contributing for a large part of the decline. The others were HDFC, HUL. HDFC has been seeing some consistent selling over the last several sessions. That continued today as well. Innocent Bank was weak. And then some other names like RIL, Indiabulls Housing Finance, again a weak day for that one. Coal India was interesting. Colleague Anshu also put out a story on how the government could look at ways of letting some of the captive miners put out excess coal into the open market as well. That was an interesting story. Stock was down, reacting to it. On the gaining side, metals generally had a good run today. So Vedanta, JSW Steel, these were some of the names on the upside. Grasim, Z Entertainment. The heavy lifting, if at all, was really done by some names like ICICI Bank, State Bank of India, and L&T, but clearly it wasn't enough because the net result on the index is negative. On the mid-caps, very quickly, yes, the silver lining is that today the market's breadth was much, much better. Good advance decline ratio despite the large cap fall. Emami, because of promoters finally raising some money, and the hope is they'll pay off whoever they need to pay off, so pledged shares won't get sold in the market. That was a stock on the upside. Kaveri Seeds, as we told you in the headline, corporate governance issues. Dish TV was also weak. And the real estate pocket was very interesting because tomorrow there is the GST Council meeting, and the expectation is that there will be a tweaking of the rate on under construction properties, and that led to a bit of a flare in this side of the market, Prashant.
Okay, so there is more activity stock-wise than a top-down look at what happened in the day. Let's get a quick view from Mitesh Thakkar, who's with us, on what he's making of things. Mitesh, your sense, and I mean dramatic sort of climb down from the day's highs, right?
That's right, Prashant. Good evening. So I think, today I thought it will be a stronger pullback. In fact, in the morning, we did close our short position on the index because we have had about 7 days of decline. Also is the fact that we were lingering around 10,650, which is now an established. We had a good first half of the session, and then I think we again sold off very aggressively. Overall, the trend, I believe, is much more on the downside. The medium-term charts have weakened a lot, and I'm looking at targets sub 10,100 eventually sometime mid-March or late March. But I think today was in that sense surprising. But the idea still remains that you should be more prone to trading on the short side on any bounce backs or pullbacks.
Okay, all right. Well, gentlemen, let's move to the next headline. PSU banks, realty as well as metals outperformed benchmark indices today. The Nifty PSU Bank index was up more than 1%, led by gains in Bank of Baroda and the likes of Vijaya Bank. Meanwhile, DLF helped the Nifty Realty Index to end in positive territory as well, gaining almost 2%. Also, as we just told you, the Nifty Metals Index was up and about, rising over a percent, fueled by Vedanta, JSW Steel and Nalco, amongst others. Technology stocks, of course, were the big laggards of the day, contributing almost 90% of the Nifty's, contributing to 90% of the Nifty's fall. Okay, we have some questions coming in. Prem Shankar Pal has a question on Infosys. He has 140 shares of the company, bought at a price of 1,048. And he is a long-term investor, wants to know whether he should hold out or sell. So this is a query on Infosys coming in.
Price is 724, Surabhi. So it's a long way off.
Yeah. So, I mean, he does say that he can be patient and remain adjusted. Though I think this must be, I don't know if this is the adjusted price or not for the stock. But Sanjeev, in any case, let's ask you, Infosys, it is off the peak, obviously. But is there any reason to sell down the holding for a long-term investor?
Well, firstly, I think 1,000 has not been the price since a long time. These are new prices. These are the highest prices we've seen in the last 3 years. So I think it must be, he may not be adjusting the bonus or the, the dividend, or I think the bonus. And I think everyone has made money in Infosys if you have invested in the last 2 years when it rallied to that, perturbed low of 900 or the change of management. The management has been extremely positive. The earnings have been good. It's been a darling of a stock. And I see no let up in that. I think it will continue to be a pride place given that we have uncertainty globally, locally, and some of the rupee weakness. So hold on. I think you may get again 850 at least on the upside in the next 6 months.
So his actual price should be closer to 500 or so. So in that sense, he is actually sitting on gains. If you adjust it for the, I think
bonus,
it was a bonus. Yeah. So 724, Sanjeev's advice is hold on. Mitesh, you would agree?
Totally. I think yes, the price is not adjusted. And my sense is that I think holding on would, I think we would see eventually stock go to higher levels. Though I think it's now done a good rally and possibly getting into bigger consolidation. Overall, I do believe that eventually we will see much higher levels over here.
Okay, we got one more question before we move on to the next headline. Krishnamurthy Ramasubramaniam from Kerala has written in with a question on Dena Bank. He wants an outlook on the stock for the long term. Very specifically, he wants to know a bit more about Dena Bank from a longer term perspective. Sanjeev, this one is to you. I mean, if you track it, Dena?
Well, it's been one of the weaker banks, and we have been telling people to stay away from most of these very, very small cap banks. Now there is the talk of the merger of a lot of more banks, which will see consolidation. We are seeing that this new leg of money from the RBI should see more recapitalization in banks. But I would advise him avoid a DENA, get into a better name like a State Bank or a Can Bank or a Bank of Baroda, where again you would be able to see much more visibility, much more consolidation. So for us it will be State Bank, Bank of Baroda and Can Bank. I would say avoid a DENA bank at this time.
Okay, all right. That's a call on Dena Bank. Let's move to the next headline of the day. And this is the third one. Emami surged over 13% today thanks to the stake sale by promoters. The management said that the proceeds would be used to pare down debt. Anisha is here to spell out the details for us. Anisha?
Well, yes, Emami was one of the top gainers in trade today, up in double digits after the promoter decided to pare down 10% stake in the company for a value of around 1,600 crores. And they have sold this stake to the mutual funds like L&T Mutual Fund, SBI Mutual Fund, IDFC and the likes. Now, this has been viewed as a positive news because now the funding constraints of the company will go away. Remember, the promoters had over-leveraged themselves and taken up debts in order to, really fund their other ventures like power as well as cement, and as a result of the stake sale, that overhang will go away. Add to that, the overhang of the pledge share also goes away. And given the fact that this deal has been done at the current market price, that also helped to assuage the investor concerns today. Even the brokerages are positive and see this as a very significant positive development, and that a lot of overhang on the stock goes away. Macquarie, for example, holds a neutral call with a target of 430, but the stock giving a thumbs up in an environment where we are seeing a lot of corporate governance issue. The stock definitely getting a thumbs up. Back to you.
Anisha, thank you very much for that. Sanjeev, Emami from here, what would you say?
Well, it's a very good sign that promoters have finally accepted that they need to bring down debt. You've seen the same in the case of Z, where the promoters are willing to sell a larger chunk of their shares to reduce the debt, reduce the other businesses which have been an overhang. And I think both the brands, both Z and Emami, are going to be excellently performing. It's a very good consumption play. The brand has been immaculate in the last many years. And I see this is a good opportunity for longer-term investors who are getting a share of the management's pie.
Okay, fair enough. That's a question. That's a take on Emami. Some relief rally, at least today, on the stock. Let's take a break on that note. On the other side, we'll come back and continue answering your questions. As we take this break, do hear out the takeaways that we got from Bata CFO R.K. Gupta, as well as Nestle India's chairman and MD Suresh Narayanan. They were both talking about their respective businesses. We'll be right back.
In last quarter, we grow by 16% in the top line, and as far as margins are concerned, means we believe that these margins are sustainable. We are putting our best efforts, and we believe that double-digit growth is possible.
We have launched close to about, I think, 30 to 40 new products that we have introduced in the last 2 to 3 years. The contribution levels started with about 2% of total sales. Okay. They closed last year with about 3.5% of sales. Ballpark, the kind of number that we would look at is anywhere between 3 to 5% of sales. The strategy at Nestle Anu is to try and see how far we can mitigate the increases in any of these costs that you're talking about, whether it is milk or wheat flour or any of the other ingredients.
We're done with 3 headlines of the day. Let's move to the 4th one. Kaveri Seeds, that stock tanked for the 2nd consecutive day on corporate governance issues. The management said that they did not inform the stock exchanges about suspension of HT Seeds license in Andhra Pradesh, as they did not find this development material in the scheme of things. Sonal Bhutra is joining in with the details on this one. Sonal, clearly that argument is not cutting ice with the market.
Well, yes, 2nd consecutive day of fall in share price of Kaveri Seeds, and this was because of certain corporate governance issues. Well, there were reports which surfaced last week which said that Andhra Pradesh government has cancelled the HT cotton seed license for certain companies, which included Kaveri Seeds, for 1 year. And the company confirmed this on its con call yesterday, where they said that yes, this will impact 5% of their total revenues. However, they are expecting to get back their licenses next 2 to 3 weeks. But the main question that arose news was, why did the company not go ahead and inform the exchanges about this particular cancellation? Because of course it contributed close to 5% of the total revenues. On being asked, the company said that they did not think it was a material transaction that took place, and also that this happens in normal course of the business. Also, they said that it was already there in the newspapers, so they did not find it necessary to go ahead and inform the exchanges because they did not hide anything from the investors. So these answers from the management is something that spooked the streets, because not only were the numbers bad, the management's clarification on this particular news was not very satisfactory, and that is why we saw the sharp downtick in the stock price today. Back to you.
Sonal, thanks for that. Let's listen in to that portion of the conference call.
So don't you think you have a fiduciary responsibility towards the shareholders to inform the stock exchanges about the suspension as and when it happened, rather than us learning it from the newspaper reports?
So that's what I explained earlier also. I don't think this has a material impact for us. That's the reason we are not informed to the exchanges. If you see overall revenue contributed by Andhra quarter is less than 5% of our revenue.
So 5% is
less than 5%.
Still close to about 50 crores, right? I mean, that's almost like 7%.
Yeah, close to
of your revenue. So 50 crores of like almost like 7% of your revenues. I mean, from the corporate governance aspect of it, I think even if it's 0.5% of the revenues or even 1 rupee, anything that has to do with licenses or the government regulatory environment, I mean, in this, you need to do inform the exchanges, because learning it from third-party sources and the company not updating is not a good corporate governance culture.
I'll get back to you in this regard. I think we have consulted people because it doesn't make any material impact on our sales. That's the reason we do it, and in our business it's a very common thing.
Okay, so that was the conference call at the exchange yesterday. The stock has been falling for days on end now, and today it was down over 10%. We got a question on Kaveri. Sajja V has 500 shares of the stock Kaveri Seed. His purchase price is 530 rupees a share. Bought the stock 3 months ago. Wants to know if he should hold or sell. He's a long-term investor. Sanjeev, let's get both Sanjeev and Mitesh in on this. Sanjeev, you first. What would you say?
Well, I don't look at this company personally, and I think best thing is to avoid this stock. If you want to be in a, in an agriculture or an agri-pesticide stock, I think UPL is faring up very well. We are very, very bullish on that. They have a very good global business. Local business is doing very good. So United Phosphorus is something where I would advise you to put your money on.
Okay, all right. That's the fundamental take on UPL. Mitesh, what would you say on the stock?
See, I think a very similar outlook. One, I like UPL as well, and I think on Kaveri Seeds also, I think the medium to longer term trend appears to be on the downside, so it's an exit, and switching to UPL will not be a bad idea.
Okay, all right. That's the comment on UPL. Let's move on. The next headline, latest government data shows several state governments are still struggling to reduce losses faced by their power distribution companies under the Uday scheme. The news put NTPC under pressure. The stock ended down almost 3% in today's action. My colleague Anshu Sharma has the details on this story. Anshu?
Well, that's right. The states participating under the Uday schemes have a target of reducing losses on account of power supply to 15%. Now, if you see the 9 months data as per Uday portal shows that all India AT&C losses are at 21.22%. Some of the states have been performing way off their targets under Uday, like Uttar Pradesh has losses of AT&C at 31.24% against a target of 19.35% until December 2018. Similarly, Bihar's AT&C losses are at 38.95% versus 21.16% target. And even for Jharkhand, the losses are at 36.12% against the target of 17.97%. While technical and commercial losses are still high for the usual states which have been making losses, the gap in average cost of power supply and average revenue realized for the 9 months of this financial year for all India is at 28 paise per unit. Please note that these data provided by states are not final, as DISCOMs are not obligated to audit their accounts every quarter. Hence, the final data on operational and financial indicators may change. Now, just recently, about 10 days back, in a review meeting with Power Ministry, states have told the centre that the power costs have increased and hence the states are unable to meet the targets set under Uday. Some of the main reasons for states states have cited are coal shortage, an increase in employee cost on account of 7th pay commission implementation, and also reduction in bill collection from rural areas where power supply has increased under Saubhagya scheme. Not only this, about 58 discoms of over 40,000 crore rupees as outstanding due as of November 2018. As per the Prapti portal, discoms owe 16,000 crore rupees alone to NTPC and about 7,300 crore rupees to Adani Power. Sources say that Power Ministry has told states that it cannot be business as usual for the discoms, as cash gap is a threat to continuous and reliable power supply. Back to you.
Okay, all right. Thanks very much for getting us that detail. So, mounting dues at distribution companies, it's not good news. We actually have a caller from the related space, a question on a power stock coming up. MD Akbar Pasha from Telangana is on the line. Good evening, sir. What is your question?
Good evening, madam. Very good evening, madam. I would like to know about the REC. I have purchased it 100 rupees. 300 shares I have purchased. Whether I should hold it for 2 years or not.
Okay. So you are sitting on a bit of a profit on REC. Sanjeev, what would you advise here? Otherwise, it's been a very range-bound stock over the last 1 year. But, I mean, the gentleman here has made some money.
Well, I would say stay put. I think power finances are in a very sweet spot, and after this merger, PFC will buy out the REC holding at a premium. So if you do get 150, that would be a time to book profit. But on a 6% dividend yield, I think these stocks, both PFC, REC, are in a sweet spot, given that bond yields are low and their receivables have been extremely good in the last 3-4 quarters, even the earnings. So I have a target of 150 on REC. As a disclosure, REC has been one of the stocks under our coverage on a positive side.
Okay, all right, Mitesh. Technically, how does REC look?
I think it's a hold. I think after a long time, the medium to longer term trend is showing signal of reversing on the upside. My initial targets are very close to what Sanjeev suggested. I think I'm looking at 145 to 148 as the range, and I think this month's low 115 may not be broken in the near future. So 110 could be a good stop loss.
Okay, Mitesh and Sanjeev, thank you very much, both of you, for being with us here on this edition of Markets Today Talk Back. So it's a wrap with that.
Absolutely. We'll take your leave. Have a great evening, and we will see you with the market again bright and early tomorrow morning.